Have you ever heard people talking about the Bitcoin 4-year cycle or the Bitcoin super cycle theory? Well, that's what we're taking a look at in today's video, and we're going to break down the 4-year cycle, zooming out from a macro lens to take a look at the overall market and how it typically behaves over that super cycle period. But as always, before we jump into today's topic, please make sure to drop a thumbs up below. Hit the subscribe button if you're not subscribed already, and click the bell notifications to get notified about all the latest news and updates in the cryptocurrency space. So, jumping into today's topic, as mentioned, what we're taking a look at is the Bitcoin 4-year cycle, or the halvings cycle, or the Bitcoin super cycle, as a lot of people refer to it as. And there's a lot of information in this chart, but we're going to break it down because we're going to take it step by step and take a look at how Bitcoin exhibits certain behaviors in a somewhat predictable pattern over this 4-year super cycle. So obviously this chart is mapping out the entire price performance of Bitcoin all the way back to 2009, 2010. And you'll notice the color-coded chart here with these various different colors over the years. So each color is basically mapped to a year. And breaking it down, we've got the 4 different colors representing the 4 different phases of each 4-year cycle. So the green color and the green box here, it represents the course of 1 year. In this particular cycle, it's representing 2011, that whole year up until the start of 2012. And that's representing this year of accumulation. And this year of accumulation tends to happen in the year before that Bitcoin halving event happens. So the Bitcoin halving event here is denoted by these dotted lines here on the chart for 2012, 2016, 2020 halving, and then we're going to have the 2024 halving over here as well. So this green year of accumulation tends to happen in the year prior to the halving event. So we're seeing that here in 2011. We saw it in 2015 before the 2016 halving. We saw it in 2019 before the 2020 halving. And then we just saw it in 2023 again before this year's halving in 2024. The blue year is the preparation year. So typically this is the year in which the halving event actually occurs. And again, it's calling it the preparation year because it's basically setting us up for the red year, which is the new all-time high, or the accelerated bull market that we see recurring here. So again, the blue year of preparation in the year of the halving in 2016 before the red year of the all-time high bull market. Again, 2020, the year of preparation before the 2021 red year, new all-time high bull market. And once again, this blue market, or this blue year that we've just began this year with 2024, is the year of the halving again before the all-time high predicted towards the end of 2025 for that bull market. So finally, the orange year in this 4-year cycle represents the bear market. Naturally, after we have this bull market new all-time high, there has to be this cool-off period that happens with this 4-year cycle. So we have the orange year, which is the year after the new all-time high, and typically 2 years after the year that the halving event occurred. So again, obviously seeing that in 2014, seeing that cool-off happening again in 2018, seeing it happen again in 2022, and again what we expect will be to see that happening in 2026, after the peak of the next bull market towards the end of 2025. So what does this give us? What insight does this give us in terms of, predicting the market and thinking about Bitcoin from a technical standpoint? Well, there's certain patterns that we've just referenced that it begins to exhibit over time. And, it's very interesting to see that pattern play out. For example, even taking the accumulation green year before the year of the halving, what we typically see is this kind of slow and steady accumulation in price action the year before the halving. So we saw that happening in 2023 here. We saw the same thing happening before the last halving in 2019. That entire year was kind of a steady growth of accumulation, began to pull back a little bit. And that's another pattern that we see with this year of preparation as well, where there is often a little bit of a pullback after that year of accumulation. So we saw that happening even earlier in this cycle in 2012, but even after this slight accumulation here, again, a little bit of a cool off in the preparation year before really taking off with the bull market. The same thing again here happening in 2016, having that preparation year and then actually having a little bit of a cool off before engaging into the fully accelerated bull market, happening again in 2019 with, again, price accumulation happening in the entire year before, still accumulating here, bit of a cool off before we really take off into the bull market. And again, this slow and steady accumulation that was happening over the period of 2023, this chart is up to date as of a few days ago, but obviously even as of a few days ago, we've seen the recent drop in price from Bitcoin for, going from 45k down to below 40k. So even a little bit of a cool off happening here in this year of preparation here as we enter and edge closer towards the Bitcoin halving event in 2024 later this year. So again, these are the different phases and the different years of price action in this 4-year cycle. And the 4-year cycle is really driven by the Bitcoin halving event. So again, if you're not familiar, Bitcoin has a halving event every 4 years or every 210,000 blocks where the halving reward gets cut in half. So miners mine Bitcoin, they use computational power to add new blocks to the blockchain and secure the network at the same time. So they're expending computational power, hash power to secure the network and add new blocks to the network, and they get rewarded for doing that. They get a block reward, and that block subsidy at the moment is 6.25 Bitcoin for every successful block that they add to the blockchain. When we get to the next halving, that block reward is going to be reduced from 6.25 to 3.125. So it gets cut in half. And this happens every 4 years. So as we progress through the course of time, the amount of Bitcoin that is entering circulation is decreasing by half that amount every 4 years until around the year 2140, when the last ever Bitcoin will be mined. And at that point, the whole idea with the mining is that the transaction fees generated from the amount of transactions happening on chain are sufficient to support the people who are doing the mining. Obviously, that's a problem for 100 years from now, but the core thing to note here is that this 4-year cycle is essentially driven by this supply shock event that happens with the Bitcoin halving every 4 years. And there's no other asset like it in the history of mankind, because even with something like gold, when we look at the stock to flow value of gold, there's still a certain amount of gold that is consistently physically mined every single year. And the stock to flow for gold is something like 59. And at the moment, the stock to flow for Bitcoin is around like 56, 57. The higher the stock to flow ratio, the better. And for the majority of the past few centuries, gold has held that top spot when it comes to stock to flow, because there's so much energy that goes into gold mining, and it takes 59 years to entirely replenish the entire gold reserves that exist on Earth that have already been mined. So that's what gives it its value. Its rarity gives it its value. And if we think about the stock to flow model for Bitcoin and how that ratio gets even better from a scarcity perspective every 4 years because the block reward diminishes and gets cut in half, it is really what drives this entire 4-year cycle, or this Bitcoin super cycle. So from a theoretical perspective, it's very interesting to think about what the implications of that might be over time as that block reward continues to get cut in half. Ultimately, it's a supply and demand issue, and the fact that gold has been so valuable over the past number of centuries comes down to supply and demand. And I think when more and more people begin to realize the scarcity of Bitcoin and the fact that this supply shock event drives this price action and this entire 4-year cycle, it'll be very interesting to see where the price goes from there. So obviously, as we approach this next Bitcoin halving in May of this year, we seem to be somewhat on course with regards to the patterns and behavior that Bitcoin tends to exhibit over this 4-year super cycle. We did see, obviously, this bear market trend for all of 2022. We then saw a bottom, and we saw price accumulation for all of 2023. Obviously, full credit to CryptoCon, who created this entire chart here, but the other things to note here that we've documented are the Bitcoin tops and bottoms being an average of plus or minus 21 days from November 28th, and the early tops, or the first and second early tops, being an average of plus or minus 21 days from July 9th. So this is taking it even a step further to really try and hone in and predict when we're going to see market tops and market bottoms. But you can see that the red and green dots here represent the cycle high and the cycle low in terms of price action, and those highs and lows tend to happen within plus or minus 21 days from the specific date of November 28th. So just looking at the most recent cycle as an example, we saw a market top around within plus or minus 21 days from November 28th, 2021. And then we saw the market bottom out plus or minus 21 days from November 28th of 2022. So he's mapped that out for each of these different cycles, and it seems to be a common trend that the top and bottom for those market highs and lows will fall within this very specific date range. Obviously, it remains to be seen whether that will also be the case as we approach this next halving and the next market top predicted, obviously within plus or minus 21 days of November 28, 2025. A lot of people would, in general, follow the same sentiment that we will probably see a market top towards Q4 of 2025. How accurate this will be extremely interesting to see. But that is the Bitcoin 4-year cycle, or the Bitcoin super cycle. We thought it'd be interesting to take a look at that today, just map it out at a very high level. Fundamentally, it comes back to the Bitcoin halving event driving that price action from creating that supply shock in terms of supply and demand. So let us know what you think. Have you taken a look at this analysis yourself? Do you think it's accurate, and where do we go from here in terms of the next 12 to 18 months of price action? As always, if you enjoy these videos, make sure you drop a thumbs up below. Make sure that you like and subscribe, and we will catch you in the next one.